Well, Marico reported an inline set of numbers in the September-ended quarter. Now, joining us now is Saugata Gupta, the MD and CEO of the company, to give us more details on how the numbers were and what are the expectations that the company has going forward in the third and the fourth ended quarter. Now, sir, to start off with, your margins were a bit off in the second quarter compared to last year. What were the reasons that led to this fall in EBITDA margins of the company?
I think we continue to face some headwinds in the input costs, and obviously we now at the beginning of a deflationary cycle in copra, so therefore going forward that will definitely ease.
So the revenue growth was quite strong in this quarter. It was around 20% compared to last year. So how are you assessing your top line growth going forward, and how do you expect the pricing and volume trends to go going forward?
So for the full year FY19 we aspire to deliver 8 to 10% volume growth. Now obviously as we enter the deflationary cycle of copra, we will pass on some of the benefits to the consumers. As you know, we had an unprecedented 60 to 90% hike in input costs, but we absorbed a lot of these costs in form of a reduced margins. So going forward we'll also pass down some of the benefit to the consumer, and so there would be therefore some kind of a price adjustment in the next maybe couple of quarters, so the inflationary component will come down.
In your release, you have mentioned about some high-cost copra inventory that you have. So can you give us a bit more details about this inventory that is there in your books, and how will it impact your margins in the third quarter of financial year 2019?
No, I think what we meant was that obviously whatever is the market prices doesn't translate into immediate gains. Similarly, when you are in an inflation situation, your consumption costs are lower than what are your market cost or your buying cost. So it always obviously you have a finished goods, you have some raw material lying with you. So I think it's a question of the immediate deflation doesn't necessarily translate into margins on a same month to month. I think there would be some kind of a couple of months lag, and that's what we meant.
Okay, sir. So also in your release you have mentioned input costs are trending higher. What are these input costs that are trending higher, and how will it impact your gross margins?
So in terms of the input costs, some of the input costs which are crude based and packaging are trending to higher because of both the crude prices and the devaluation of the rupee. But as I said, that it will more than offset by the decline in the copra cost, which going forward in the couple of quarters.
But I guess rising crude prices and declining rupee was a issue a few days back. But as of now, we have seen the crude prices have come off a bit. So with copra prices coming down and crude prices also coming down, can we expect an expansion in your margins in Q3?
So I think trending forward there would be some expansion in margins. But having said that, I think you have to look at the crude and the input costs of that on a YOI as opposed to a sequential quarter.
Okay, and considering the competitive scenario now in the FMCG industry, what's Marico's strategy, and will it be a higher market share or the cost of pricing that the company will be looking at?
So I think we'll continue to defend our market share, as you know that for us volume growth and market share is very, very critical, and especially for us the competitive intensity is at the bottom of pyramid and the price point packs where we continue to defend market share. At the same time, we would like to aggressively invest behind premiumization and drive value share at the top end of the market, and also in the modern trade and e-com channels.
So will this market share come at a cost of pricing, or will you won't take any hits in pricing this time?
So as I said, the bottom of pyramid you have to aggressively defend. So therefore we have to be obviously cognizant of pricing. At the same time, I think innovation and premiumization should drive the mix at the top of the pyramid. That's the way to actually manage this growth when you have competitive intensity.
And sir, can you share us a bit more details about the international markets? How is the growth looking there?
I think we have now stabilized most of the key international markets, and we are pretty confident of delivering a double-digit constant currency growth in the coming quarters.
Lastly, sir, what is your plan and strategy when it comes to your Saffola product? Volumes have remained quite a bit slow for that product.
So I think Saffola faced multiple challenges as far as Saffola oils is concerned, and I think we have now stabilized it a bit. Having said that, it's still work in progress. We have stabilized some part of the variants and some of the channels, but we have to get our act right and say urban general trade and some of the variants. This will take a couple of quarters, but I believe that if we are at it in terms of execution and getting the strategy right, we should be in a position to get back double-digit growth in a couple of quarters.
Well, that would be all, sir. Thank you for speaking to Bloomberg Quint. With that, it's a wrap on this edition of Bloomberg Quint. Stay tuned for more.